What exactly are estate taxes and how do they affect my heirs? How can I legally minimize or avoid estate taxes for my beneficiaries? You most probably have asked questions like this before to yourself, and I'm here to answer them. My name is Seth Levy with Inheritance Law, and today we will go over estate taxes and what you can do to protect against them. What exactly is an estate tax? In simple terms, an estate tax is a tax on the transfer of wealth when someone passes away. It's sometimes called a death tax, although that's a bit dramatic. Essentially, when a person dies, the value of everything they own, their home, investments, cash, and other property, gets added up, and if that total value exceeds a certain threshold, the government requires taxes to be paid on the amount over that threshold. Now, when do you have to pay estate taxes? Not every estate is subject to this tax, and that's a common misconception. You only have to pay estate taxes if the total value of the estate exceeds the exemption amount set by the federal government. In 2024, that exemption amount is $12.92 million per individual. This means that if your estate is valued under that, your beneficiaries won't have to worry about federal estate taxes. For married couples, the exemption can be doubled, meaning they can pass along almost $26 million tax-free to their heirs. It is important to note that the burden of estate taxes above these thresholds can be burdensome. The top federal estate tax rate is currently 40%. Imagine you spend your entire life building wealth, and when you die, 40% of everything above the exemption goes to the government and not to your heirs. And let's not forget that several states themselves impose estate or inheritance taxes, which can add another layer of complexity and financial burden. For example, if you live in a state like New York or Massachusetts, you could face estate taxes on top of the federal estate tax, even if your estate is worth less than the federal exemption amount. Now, I should also mention the upcoming changes to the estate tax exemptions. One of the biggest challenges with estate tax planning is that these rules are not set in stone. In fact, there's a significant change coming in 2026. The current estate tax exemption, which is set at $12.92 million per individual, will be cut in half. That's right, it's expected to revert to about $5 million per individual unless Congress acts to extend the higher exemption. So families with larger estates may suddenly find themselves facing estate taxes after 2025. So what can you do about estate taxes? Fortunately, there are several strategies to minimize or even avoid estate taxes altogether. And here are some of the key methods you can leverage to safeguard your legacy. Strategy number 1, gifting. One of the most common and effective ways to reduce your taxable estate is to start giving gifts to your beneficiaries while you're still alive. The IRS allows individuals to gift up to $17,000 per year in 2024 per recipient without triggering any gift tax. For married couples, the amount is doubled. Over time, gifting can significantly reduce the size of your taxable estate. Strategy number 2, irrevocable trusts. Another powerful tool is the use of irrevocable trusts, which remove assets from your estate. By transferring assets into an irrevocable trust, you essentially give up ownership of those assets, meaning they are no longer part of your taxable estate. Popular options include grantor retained annuity trusts, GRATs, irrevocable life insurance trusts, ILITs. Strategy number 3, family limited partnerships. Family limited partnerships allow you to transfer assets to your family members while retaining control over them. You can also use valuation discounts to reduce the value of the transferred assets for tax purposes. Strategy number 4, charitable giving. Donating a portion of your estate to a qualified charity can significantly reduce your taxable estate. Charitable remainder trusts, CRTs, and charitable lead trusts, CLTs, are popular strategies for doing this while still providing for your family and reducing your tax liability. Strategy number 5, portability. If you're married, you can use something called the portability election, which allows the unused portion of the deceased spouse estate tax exemption to transfer to the surviving spouse. This can effectively double the exemption for married couples. There are some critical considerations to make when applying these estate tax strategies. When implementing any of these strategies, it's important to keep a few things in mind. First, timing. Start early. Some strategies like gifting require years to work effectively. Second, there's flexibility. Once assets are transferred into certain types of trusts, they're out of your control. Make sure you understand the implications of each method. Third, you must consider valuation. Proper valuation of assets is crucial, especially when using techniques like family limited partnerships or grantor retained annuity trusts, which rely on discounted valuations. Fourth, and significantly, changing laws. Keep an eye on changes in the tax law, especially with the 2026 reversion in mind. It may be wise to implement strategies now while the exemptions are still high. Let me share a story of how proper planning can make a world of difference. We worked with a client, let's call him John, who had a substantial estate valued at around $20 million. John was unaware that his estate would face significant federal and state estate taxes upon his passing. In fact, without any planning, his heirs would have faced a tax bill of more than $3 million. John was understandably concerned. He had worked hard to build his wealth and wanted to ensure that his family would benefit, not the IRS. We helped John implement a combination of strategies. First, he began making annual tax-free gifts to his children and grandchildren, reducing his taxable estate. We established an irrevocable life insurance trust to ensure his life insurance proceeds would not be subject to estate tax. 3. We also set up a charitable remainder trust, which allowed him to leave a portion of his estate to charity while also providing income for his family for years to come. As a result, John's taxable estate was reduced dramatically. By the time of his passing, his heirs paid $0 in federal estate taxes, and they were able to preserve the family's wealth for future generations. John's relief and gratitude were palpable. He had achieved exactly what he wanted. More of his wealth went to his family and the causes he cared about rather than to the government. As you've likely taken from the depth and the breadth of this discussion, estate tax planning is complex and the stakes are incredibly high. Even small oversights can lead to significant financial consequences for your family. That's why professional guidance is not just helpful, it's essential. At Heritage Law, we specialize in navigating these intricate rules and designing personalized strategies that align with your goals and your family's unique situation. Whether it's setting up trusts, implementing gifting strategies, or creating charitable plans, we have the experience and expertise to ensure that your wealth is protected and that you pass on as much of it as possible to the people who matter most to you. We don't believe in one-size-fits-all solutions. Every family, every estate, and every set of goals is different. Our approach is comprehensive and customized. We work closely with you to understand your assets, your concerns, and your long-term vision. Then we craft a plan that not only minimizes taxes, but also ensures your family's future is secure. It's easy to delay estate planning. Many people do. But with the changes coming in 2026 and the ongoing complexities of estate tax law, the time to act is now. By working with us at Heritage Law, you'll have peace of mind knowing that you've taken every step you can to protect your legacy. If you have any questions or need any help navigating the best path forward, don't hesitate to reach out. We're here to guide you through every step of the estate planning process, ensuring that your family avoids unnecessary taxes and that your hard-earned wealth stays where it belongs, with your loved ones. In conclusion, estate taxes can be incredibly complex and burdensome. With the upcoming changes after 2025, it's more important than ever to plan ahead. A good estate plan can help minimize your taxes your heirs might have to face and ensure that more of your hard-earned wealth goes to your loved ones and not the government. Estate taxes can be detrimental to your loved ones. And like I said, it's best to speak with a professional as soon as possible. So, click the link below and book a free consultation with us. And together, we can safeguard your legacy.